Morning, Steve Frey in Chicago with the morning grain comment. Well, you got beans up about 6 cents overnight. Wheat and corn prices about unchanged. U.S. dollar is lower. The dollar has been very choppy in the last couple of days, with one Fed chairman saying they're about ready to raise U.S. interest rates, and overnight another one said that that's still a long way away. So you've got the U.S. stocks up and the dollar down. As far as the overnight grain news, the 6 to 10 day and the 18-14 day maps are drier than normal and warmer than normal. When you listen to the private forecasters, they'll say the warmth is in the southwest and west, and the dryness for the most part is in the east. So we'll see how that finishes the corn crop and the impact it might have on the bean crop. We had a private estimate overnight of the U.S. corn yield at 165 and bean yield at 45. It's probably a little bit higher than what the market expected from this group. USDA in July was 166.8, and on the beans 46. We had an earlier estimate of a group that kind of traveled through the Midwest at 163 for the corn and 44 on the beans. We have another private estimate today, and we'll see what they have to say, and the USDA reports August 12th. So when you listen to people talk, you hear about the same thing. In the Northwest, record corn and bean yield potentials. In the East, yields are not as good as average. Over the last 4 days, I drove down to Missouri and back. Central Illinois looks okay, but the talk is that East Central Illinois conditions are very bad. You get part into the Southern Illinois area, you can see the remnants of too much rain. Same thing in Missouri. Missouri might be a little bit worse than Southern Illinois. It just looks like certain fields were not planted or did not get planted. So a big task ahead for the USDA to try to put all this divergence into one U.S. corn and soybean yield. Have heard the last few days more talk about corn coming in from Brazil, world prices cheaper than U.S. We've talked about maybe meal coming into the United States, with world meal prices cheaper than U.S. But in the domestic market, meal demand continues to be strong, which is bidding up for the price of beans. And it feels like last year's bean supply is lower than what the market, what the USDA is saying. Corn basis also firming up, with the farmer not selling at these prices. I doubt the farmer will sell a lot between now and harvest. So in general, you got a lot of mixed news. The market feels that USDA is going to come out with a friendly soybean report. They also could come out with a neutral corn report on August 12th. So we'll see how all that unfolds. It's interesting that there is some momentum building up, that once we put a low in the corn market in, let's say, the next 3 or 4 months, a lot of people want to have ownership in the DEES 2016 corn contract, thinking that we may need to buy acres, or that global demand may pick up at these prices, or the farmer may not be a big seller. So interesting that we're building up some interest in owning the DEES 16 corn contract. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
$5,298 for July cattle. That's on a July cattle.